Welcome to our Savvy series. I'm Catherine Magana here with Rachel Ivanovich. And today we're going to talk about something you probably have heard many times and kind of going back to basics. And we want to kind of share something to make sure you fully understand how to apply it. So today we're going to have a conversation on what is diversification. And so while many of you believe that potentially you're diversified, the reality is that might not be the case. And it's a really important concept when it comes to investing and kind of looking at the foundation of your investments and things you have in place. Kind of taking a step back, we do comprehensive financial planning. What that means is we really look at our clients, we help them do goal setting, budgeting, kind of lay out some goals and look at all of their different income sources. We actually help manage the money, but the money that we manage is tied into the overall financial plan that we have in place. We do the tax planning. And so when it comes to the investing, we design different portfolios and different strategies for our clients. And a lot of that does tie into being diversified. So we're going to dive in deep today and really talk about what diversification is.
And there's a common belief that I own multiple investments, so I'm diversified.
Yes.
But the reality is that oftentimes your portfolio might be more concentrated than you think. And, a lot of really successful women, maybe you've built significant wealth, but you want to make sure that your portfolio is structured intentionally and that you're not over concentrated.
So what does diversification really mean? And at the core of it, it means do not put all of your eggs in one basket. So obviously, we're not saying go buy one stock or one company and have everything you own in this one company. There's obviously some risk involved. We're talking about really spreading out your money amongst different investment classes. We're also going to talk about looking at different sectors and different types of investments. And so once again, it's having a mix of different types of investments that once again tie into your to your financial plan. And if you're heavily concentrated in a position, those are part of the conversation we have is, what's that concentration in your portfolio and the importance of being diversified.
When it's going up, it feels great.
I know, it's course. It's like, everybody wants the upside.
Exactly. So let's talk about why diversification matters. So it's really about managing uncertainty because no one can really predict what the markets are going to do next. So instead of trying to predict the markets, you want to prepare. So we worked with a client for many years. She built wealth primarily in one industry, which would be technology, which, as we all know, how that's done. And it worked really well for a lot of years. But then when that sector started experiencing volatility, her portfolio dropped significantly, and it really was scary, and it dropped even more significantly than the overall market even. And it's not that just it declined, but it was how it made her feel. And so there's this level of stress that comes with that and uncertainty that comes with being too heavily concentrated in one industry. And so when you're diversifying, you want to make sure that you're planning ahead and that you manage things versus react.
Okay. So what diversification is not, so this is kind of where we get a little bit of confusion, is you think I own different investments, and so I'm diversified. But the reality is, what kind of investments do you own? And taking a little closer look at all the different investments that you have, and is there any overlap or what kind of exposure do you have? So yes, you may have multiple investments, but what kind of diversification is in place? So I'm going to talk a little bit about some different types of diversification. So I'm going to start with asset classes. So when you think of asset classes, we're just going to talk more in general. You typically think of stocks, bonds, cash or cash equivalents, real estate, or alternatives are kind of some different asset classes that you look at. And then you kind of look at, okay, well, then what am I invested in amongst different sectors? And so sectors then kind of looking at within the stock portion could be, there's multiple different sectors. So it could be information technology, healthcare sector, financials, consumer discretion, consumer staples, energy, materials, communications. And so those are just a few. And what that means is with those stocks, how are they categorized and what kind of industries are they in? And then you can look at, geography. So how are you invested? Are you mostly in U.S. stocks? Do you have any international exposure? or emerging markets. And so once again, with a stock portion, even bond portion, there is you could invest in international bonds as well. But looking at how are you allocated between U.S. and non-U.S. investments. And then we look at, for diversification, is investment styles. So investment styles there are growth investments, there's value investments. To start with growth investments, so growth investments would be if you own a growth stock. With that stock, the company is putting money back into the business to grow it. So they're not. Their objective is to have this company continue to grow. So that
they're not actively maybe paying a dividend.
Correct. So then that's the value stock. So then there's value stocks potentially where they could kick off dividends or paying dividends to their investors. So there's different styles of stocks. So when you look at being diversified within different investment styles, there's growth and value. And then there's the size of the company. So there's large companies, mid-sized companies, small companies. And so there's different allocations we have based on the size. And then once again, like you mentioned, value stocks could pay dividends. Well, there could be income-generated investments in mutual funds or other stocks or REITs or other types of investments. So once again, an income investment could be a bond or dividend-paying stock. So as you kind of look at being diversified, there is an asset allocation chart, which over time you look at. Once again, there's large companies, mid-sized companies, small. There's international, there's emerging markets, there's fixed income. Even within fixed income, which is also known as bonds, there's different levels of bonds, which we did a Savvy series on bonds recently. There's real estate or REITs you can invest in. There's the international as well as emerging markets.
So many choices.
Yes, a lot of different options. And so what happens is if you look back at the history of some of the returns, there are certain sectors or areas, asset classes that may be in and out of favor. And so it's really making sure that how does your investment allocation tie in, once again, to your overall financial plan, and how is your plan and investments working together? So it is important to be diversified. And what we find sometimes is occasionally when you have investing, there could also be some overlap with some of the investments that you have. So as we dig a little deeper, once again, wanted to kind of share a little bit. There are a lot of different investment options. That's what we do. That's what we help our clients. We know there's a lot to cover, and that's what we're here to really help and guide our clients make what's the best decision for them.
And diversification allows you to participate in different areas of growth, not just one.
Exactly.
So let's talk a little bit about a real example of diversification. And we see this coming up often where we'll have a client who has a really great job, but part of their equity, part of their compensation is stock options.
Yes.
So they not only have their income tied in with the company, but they also have a lot of their portfolio tied in because they have maybe employee stock purchase plan or what ESPPs. Mm-hmm. Maybe they have restricted stock units or options. And so all of a sudden their wealth is very significant in this one company. Mm-hmm. And so a lot of their net worth is tied into that. And so they're not very diversified because of that. And so it feels great when the company's doing well, but then if the company experiences a downturn, then all of a sudden they start to feel very, very out of control because, number one, income starts to feel less certain because this company has a downturn. What's going to happen? Am I going to preserve my job? Are there going to be layoffs? And we've seen this happen very often. And also, at the same time that you have the uncertainty with your job and maybe are you going to keep it? Is there going to be a wave of layoffs? The portfolio also declines because they have a lot of their stock and their net worth tied in with company stock. And so it's not just a market issue, it's really a planning issue.
Yeah, and once again, are you concentrated in just, like I said, the stock options and the stock of the company and your income? And it's interesting you share that. I know we recently also did a whole series on some stock options and some tax consequences to think about. But one of the things that comes to mind for me is we did have a client in the past that we've worked with, and they had, when they came to us, it was after they got burned with some of the stock options. So recently, as they're phasing into retirement, they had some stock options and they decided to exercise and cash out because as they're phasing into retirement, they're like, I don't care if I have to pay taxes at this point. I want to make sure because I'm diversified because I got burned and they lost basically a lot of their net worth early on. Yeah. They were able to recover. but that was one of their kind of circumstances where they felt, okay, it was with one company. I'm okay now. Now I have these options. I'm going to go ahead and pay the taxes because there's, unfortunately, there's a lot of taxes that are involved too with this.
Yes, definitely. So diversification is not just a product. It's a framework. It's a way of looking at your portfolio and overall. So for someone approaching retirement, diversification is going to become even more important because your focus is going to shift because as you are earning money and working, you're accumulating, you're in the accumulation phase of building your portfolio and having the growth. But then as you approach retirement, your time horizon is shortened. So you want to think, okay, maybe I need to shift gears, move into preservation. Maybe I need to replace my salary. So where's the income going to come from? So you really need to start thinking about it a little bit differently. And it might mean reducing your exposure to areas that have really high volatility and to increase your exposure to something that's maybe more stable.
Okay. So let's talk about some common mistakes we've seen as we kind of wrap up here. So thinking that more investments means diversification. So, you may have a lot of different stocks or different investments and you think, okay, I'm diversified. But the reality is, are you really diversified? And let's really take a deeper look into all the different...
What you actually own.
Exactly. Yeah. We talked a little bit about over-concentration. So once again, there might be a stock that has grown, and we know there's a lot of, there's some clients that have some positions that have done very well for them. And it's hard, it's very hard to get out, to let go. It's because there's
we have a client who's like that, who has 4 or 5 stocks in their portfolio, and it comprises 70% of the portfolio, and they're overlapping industries. And so, but they're like, but it's done really, really well. Why should I get out?
Yeah. And so once again, it could
done
go
great
down. Yeah,
so far.
So let's take some a little bit off the table and diversify. Yeah. Obviously, not considering global diversification or international or emerging markets. What's happened is over the last year and this year, international has done better than usual. But historically, over the last 20 years, some of those sectors haven't performed as well, or asset classes. So it's, once again, you don't want to chase what's hot. You really want to have a diversified portfolio. So when those areas do better, that you're participating in the gains. And then obviously, as stocks and bonds, and depending on how you're invested, occasionally your weightings may change, and we've had that conversation as well about rebalancing. And so one of the things is making sure you have a good allocation with your investments. And then obviously we talked about letting those winners grow too big, and once again taking the maybe trimming those down.
It's always so hard to know because you can't predict the market.
So and that's the hard part. And so we do think over time, continuing to revisit and seeing what's your risk temperament, have things changed in your life, and do you feel comfortable with how you're invested, I think is important.
So what's a better way to think about diversification? I don't know. I think it's a structured way of looking at balancing risk and opportunity, and you want to make sure that there's no one single outcome that will determine your financial future. Yeah. You really just want long-term stability for your life, for your portfolio, for your family. Yeah.
So while diversification sounds simple, there's a little bit more to it. And obviously, we want to make sure that you stay invested, you're in a good allocation, you're diversified. And we do think it's important to go back to basics. I mean, it is important to go back to the fundamentals of what is a stock, what is a bond, what are, and if some of these things that we shared today resonate with you, if you want to continue to learn or have us look at your portfolios, we're happy to do so. So I know we've talked about a lot. Once again, it's important to make sure your portfolio is constructed in a certain way. And if you would like a second opinion, or if you'd like us to have a conversation with you, you can reach us at 760-692-5700. And we want to thank you today for getting savvy with us about your finances. And remember to savvy up. Please stay tuned for important disclosures. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results, and the indices referenced for comparison are unmanaged and cannot be invested into directly. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional. Savvy Woman Wealth Management is a registered investment advisor with the SEC.